Welcome to Investor in the Family Radio, a podcast dedicated to helping you make better investments in less time so you can live more life. My name is Brian Bain, and I'm your host. You can find more shows and other valuable content at investorinthefamily.com. Well, in today's show, we've got Ryan Reeves, who on Seeking Alpha is known as Investing City. Ryan, welcome to the show.
Thanks so much, Brian.
Hey, great to have you. And Ryan recently wrote an article on Seeking Alpha called iQIYI by the Dip. And of course, before this interview, we're actually discussing the actual appropriate way to pronounce iQIYI. And so a little bit of up for some interpretation there. But we're going to go by either iQIYI or IQ. And so anyone in the comment section, if you want to offer your best suggestion of pronunciation, we welcome that as well. But iQIYI by the Dip. So Ryan, could you tell us a little bit about what was it, for people who haven't read the article yet, what's the premise and what's your thesis on this company?
Yeah, of course. So basically, the week before I wrote this article, I wrote an initial one on IQ, and it's basically just detailing it, why I think it's a good investment. And the title of that one is 2 Reasons This Run Can Continue, because iQIYI, it IPO'd around 18 or so, and then it kind of lagged for a while. But after its first earnings report, the stock really took off. And when I wrote that first article, it was at 43. And then there was kind of these scares around tariffs. Trump was like doing his big talk and stuff. And so IQ kind of pulled back 30% off its highs. And so that's kind of the context for this iQIYI by the Dip. And kind of make the thesis that it was cheap relative to Netflix before the dip, and now it's even more cheap. And so I kind of go through some recent developments since that article, and then why I really think that IQ is pretty reasonably valued.
Okay, a number of great things there I wanted to ask about. First of all, just for clarity's sake, again, we're recording this early July 2018. About where is IQ right now, price-wise, approximately?
So it's about 33.
Okay. So IPO'd around 18, lagged after earnings, took off to as high as 43. Tariff scares pulled it back around 30% to about 33 or so. And so, but you said you feel like even at 43, it was cheap if you're comparing it to Netflix.
Yeah, that's a good catch right there, because it's pretty interesting. So Netflix and IQ are essentially the same, but also they have very different business models. So Netflix, it's all subscriber based. It has 125 million subscribers as of last quarter. But then IQ, they have kind of a 2-pronged business model where they have subscriptions and advertising revenue. And so right now, the ad in the past quarter, the first quarter, 2018, they actually had equal amounts of ad revenue and subscription revenue. And so it's actually really interesting is that IQ has about 60 million subscribers versus Netflix's 125 million. And so the market cap, sorry, I'm kind of going into super detail right now. But the market cap of IQ is about 23 billion. If you kind of back out the IPO proceeds, you get 21 billion in enterprise value versus Netflix, which market cap is about 166 billion.
You said, you said IQ has market cap of about 20 billion?
Yeah, about 21 billion.
Okay.
After you back out the cash and stuff.
Okay.
And then, so if you just take it market cap value, Netflix is about 8 times larger. However, it only has 2 times the amount of subscribers. And so you can see that Netflix is valued much more richly per subscriber. And then it's kind of hard to explain without a visual, but essentially the market is just putting a super premium on Netflix's per subscriber value. And so kind of with all of that, you have IQ as a little bit of, that's just the justification for why it's reasonably valued.
Right. Well, let's go through some of the reasons why people would be giving Netflix that premium or IQ that discount. You know, Netflix, you know, it's funny because I have a Netflix account and I don't even know how much it costs. It was like $13 a month or so. Do you have any idea, the IQ's equivalent subscription service? Do you have any idea what it costs?
Yeah, so that's the key thing, because when it was around 43, it was a little bit like Netflix was valued around 4 times the amount per subscriber, and that's because iQIYI is about 1/4 the price. It's really varies because they kind of have specific packages, but there's some starting at 15 renminbi, which kind of comes out to about like $2.50, $3 per month.
Gotcha.
And then there's specific things like you can add on sports, you can do all this, so it's kind of hard to get an average selling price.
Right, but that's still helpful. And then, so one reason, so in theory, you could say, well, if Netflix subs are valued at 8x of iQIYI's, well, part of that's coming because iQIYI's subs are worth 1/4 of what a Netflix sub is. So that takes up about 1/4 of that. So that means, but it still there's still a premium on the Netflix subs or a discount on iQIYI, even when you factor in that 1/4 piece. But it does dramatically bring down, it shrinks that gap significantly. Do you think, of course, one thing I've discussed in previous interviews also is the fact that iQIYI, being Chinese-based, purely creates a kind of a black box dynamic, not in a negative way, but it's just not as known to American investors. Because like in the US, you talk about Netflix, like, well, yeah, I have a Netflix account. I understand completely how it works. I know how it costs. But you have iQIYI or iQIYI in China, and it's like, well, all I know is what I've read, and people say it's like Netflix. So it's hard to be as behind it because of that gap. And how much of that do you think that is factoring into the discount?
I think, yeah, it's a great point. And I think that is exactly the discrepancy. If you look at other companies like JD.com versus Amazon, like JD is trading for less than 1 time sales versus Amazon's retail segment that's about 2 or 3. So you kind of have that 2 times appreciation just because you have US investors way more familiar with these names. But I think that's also why Chinese stocks are so interesting, is because once that veil kind of comes down and people realize that this is an extremely fast-growing middle class, and that the population, like internet users in China, is about 731 million, which is more than twice the U.S. population. So you have all these dynamics at play. Yeah, I think there's still a bad rap around Chinese stocks just because there's something like accounting scandals that have happened in the past, and there's just, like you said, there's this black box. But I think that's a little bit what creates the opportunity.
Exactly. Well, I mean, I know people that I respect as investors who, what you just said, is like, I don't invest in Chinese companies because they just have concerns about whether it be the accounting or the reliability of financial statements and things like that, and for whatever reason, better or worse, there are I guess historical reasons for people to have those concerns. And of course, there are plenty of American companies that have, that mess with and manipulate their accounting and their books as well. But for various reasons, people have that perception of some Chinese companies as well. So, that makes sense. I know people have mentioned as well concerns about, the big three or the other big companies like Tencent, Alibaba. iQIYI does well, say, hey, they're the Netflix of China. That's great. And I mean, how many U.S. investors would have loved to have gotten in on Netflix at this point, a few months after the IPO? So that makes it exciting. But then it's also like, well, what if Tencent decides they want to jump into the space and they pull in all their firepower? Do you have concerns of that, or what are your views on that regard?
Yeah, so that's a super good question. And it's actually funny that you bring up Tencent specifically because they are the number 2 competitor to iQIYI. They have Tencent Video, and subscribers are growing at a super fast clip there. But I think big picture, there is enough space and enough subscribers to go around to accommodate multiple players. Like, for instance, in the US, people have all sorts of subscriptions, Netflix, Hulu, and Netflix is still like, there's so much competition in the online streaming space, and Netflix still continues to get it done year after year just because of this kind of secret sauce that I think I see a little bit of in iQIYI. Actually, just to mention a third player, there's Alibaba's what's called Yuko To Do or something. It's hard to pronounce, but that's kind of a third player in that space. So definitely the big three are still present.
Is there, and another thing, okay, so point there being, yes, there's concerns about a Tencent or even Alibaba competing, But like I said, you got 730 million internet users in China. There's the idea of there being one streaming site to rule them all is probably a little bit naive.
Exactly. And just another point, it's not like iQIYI is some random company. Like, they were spun out of Baidu, and Baidu is kind of like the Google of China, which holds an 80% interest in iQIYI. And so it's not like they're kind of some random company. Like, they're spun off of one of the biggest companies in China. And so I think that gives them a little bit of firepower and at least the distribution. Because Baidu really does hold a central part in the internet scene in China.
Well, and that is very significant, because one of the other questions I was going to ask is, so, there's a lot of good things we said about Baidu, and then, you have concerns about competition from Tencent or Alibaba, and you think, well, yeah, but they can all coexist. But then the other, I guess, a obvious question would be then is, how legitimate is iQIYI? Yeah, they've IPO'd in their new company, but do they have enough momentum and scaling size to remain competitive? But then I guess as I ask that question, I'm looking at my notes. You said they've already got 60 million subs, so that's a pretty significant momentum, I guess.
Definitely. And in their IPO prospectus, they reported about 51 million subs. And so that 60 million number is just after one quarter. And so you really see the business momentum, in my opinion, picking up, because that's about 19% sequential growth. In one quarter, 9 million subs. I don't know if Netflix has ever done that.
Right. Well, that was, again, another question I was thinking of. What has the growth trajectory been? Like, do you have any idea that maybe they don't report these numbers? Like, how many subs they had like a year ago?
So, yeah, at the end of 2016, it was about 30 million, and then that jumped all the way up to 50 million. So, just the math, that's almost 70% growth in 1 year in terms of subs.
Yeah, of course, and now they're at 60, so a little over a year, they've almost doubled. That's pretty incredible.
Exactly, 5 quarters.
And, and I guess it makes sense, if you've got a 731 million people who are internet users, and I'm sure a large portion of those are mobile users, and very active mobile users is my understanding. And if you have a significant player that comes in, and if you're scaling to 30 million subs and then you jump to 60 million, that's incredible momentum. You're obviously, people are sharing and liking what you're doing. They wouldn't be scaling on that quickly. And if you keep doing what you're doing, yeah, I mean, it seems reasonable to expect that growth will continue. Again, nothing's guaranteed, but
yeah, exactly. It's just kind of that high level. And the thing is that iQIYI has about 421 million monthly active users, and so that 60 million is still only about what's that, like a small percentage relatively of the whole base is actually paying customers. And so you can see that number really expand, even if it gets up to half, because I'm pretty sure people will be willing to pay $2 a month in order to skip commercials or whatever. I think that's pretty reasonable. So if you get up to half, that's more than 3 times the current subs. So you can see just from like a high level picture the potential that iQIYI has.
How long has this company been around?
That's a super good question. I want to say that Yu Gong, their CEO, founded it in 2007, but I want to do just a
okay. So they've been around for a while, but obviously they've come on strong recently.
Definitely.
Because I'm thinking, if they've got 421 million active users, so that's a lot of people they're able to monetize from an advertising standpoint. But I'm curious if they've got 60 million of those are paying subs. Yeah, I'm just curious how long it's taken them to get to that point, and how do you have any idea what active users were like a year ago?
I don't have that off the top of my head, but just to go back to how long it's been around. So Yu Gong, their CEO, he sold an internet company to Sohu, and then he started iQIYI in 2009. So it's really only been around 9 years that this company has been around. But I can look up the numbers for the active users a year ago.
Yeah, I mean, if that's easy to do, because I'm curious how that number may be growing. And I'd be curious to compare that to the growth you've seen in the subs.
2007. Yeah, we can move on. I'll find it though.
That's fine. No problem at all. So tell me this. So obviously, we said a lot of good things about the company. Oh, one more question. When people refer to iQIYI as the Netflix of China, That's again another way for Americans to try to figure out how do we understand this company. And the same thing happened with Alibaba and with Tencent. We try to say, oh, it's the Amazon of China. But then with Alibaba, it's like, I wish I had a listen. It'd be like they say, Alibaba is the Amazon, Twitter, PayPal, and like
Exactly.
the eBay of China, plus other things. Is saying iQIYI is the Netflix of China. How accurate is that? How is that an oversimplification that is not really helpful to investors? What do you think?
I love the question because it's so funny. You do see all of these, like Alibaba's all these things, which to some degree it is true, but as investors, we're definitely prone to pattern recognition because that's a lot of what investing is. And so we kind of latch onto these archetypes of stocks. And so I think to some degree it is helpful. But also, if you really drill down in the business model, the advertising revenue of iQIYI really differentiates it. And so before this interview, I was really just trying to think of like what would it look like if Netflix was like they had ads in their shows. I was just thinking of kind of the dynamic where if you don't offer ads at all, is it really intrusive to just all of a sudden start putting ads in? Or if you start with ads and then try to build up subscribers, is that like a better way to go around it? And I don't really have I didn't really come to a conclusion or anything, but I just think it's interesting that in like a high level sense, iQIYI is very much similar to Netflix. Like, I think the core of the business will be subscribers going forward. But even Yu Gong, the CEO, says like he doesn't want to be Netflix of China. He wants to be Disney of China and really focus on more things like licensing, intellectual property, kind of the offshoots of the popular shows and things like that. And so there's all these dynamics at play. So I think it's a really interesting question.
I'm glad you said that because I was waiting. I was curious about that because I've heard that before as well, about the Disney piece versus Netflix, which is interesting too. Because I've done an interview recently with someone who's comparing Netflix to Disney, which is not uncommon, and just the different valuations the two companies are receiving, and like why investors are loving Netflix so much and not Disney as much, and things like that. And so it's funny. Then we're in a situation now where you've got a CEO of a seemingly very successful Netflix type company in China who's saying they want to be like the Disney, which is a company that stock wise is not doing as well in America, but there's obviously is a lot more to it. It's not quite that simple as a comparison, of course. It is interesting what you said as far as, what's better to start with ads or add them later on. I mean, I definitely think, if Netflix tried to add ads now, it'd be like Facebook starting to charge for service, because once you give something for free, then you start charging for it later on. People get really annoyed with you.
Definitely.
But Netflix is like the king of like, hey, we made everyone hate us, but now they love us, because back when they did their switching of when they kind of killed their DVD business and the stock plummeted and everyone's like, we hate you and all that kind of stuff, but we got over it. You know what I mean? And it's like every time Facebook changes the way their news feed looks and everyone's like, I hate you. And they're like, oh, this is fine. Never mind. Yeah. So I could see that, but it does make sense. But if you can start out with ads and then, you can almost kind of force people into subscriptions. Because like Hulu, for example, we used to have the ad version of Hulu, and that may be the only option they had. I don't know, but we watched Hulu and they'd have ads and it was kind of annoying. And they never, and it was funny because it's like, clearly they had a really hard time selling their ad space for some reason, because there's always the same ads for like really obscure random stuff. And I'm like, why am I seeing this? But when they offered the chance to get rid of those ads for like, I mean, it was almost a 40% increase in my monthly bill. Again, it went from like $7 to $11, so it wasn't that big of a deal. But that's like 40% or 30%, whatever. Like I jumped at the chance to do that. And so you think with iQIYI, man, if they start adding a few more commercials in and stuff like that, I could see them probably pretty easily able to start kind of pushing people more into subs. And the beauty of subs is obviously it's recurring revenue and its predictability and things like that. Yeah,
exactly. You touched on some really good things. Also, I just want to note, I found that number for the monthly active users.
Great.
So the last reported number was about 421 million. That's mobile, actually. And so the year before that was 405.
Okay.
So you had like a decent amount of growth.
You said it was 405. Was that in
2016?
Okay.
Yeah, exactly. And the year before that was actually 365. And so they've added in 2 years just about 50 million monthly active users.
What that shows, though, is if in 2016 they had 405 monthly active users and that grew to 421, say now, that's not that much growth, but clearly existing users are converting at a fast rate. And that's kind of what I wanted to be able to see, is how fast are those current active users converting to subscribers. And it seems like they're doing a really great job of converting them over.
Yeah, exactly. And also, there's a chart. So in 2016, like I said, there was 30 million subscribing members. If you back that up to 2015, it's about 11 million. So you see in 1 year it jumped almost 3 times.
Wow. Okay.
So exactly what you're saying. Kind of those existing users are saying like, oh, maybe I'll skip some ads here and there, and you can see the stickiness of that ecosystem.
Right. Man, make a note of that. So in 2015, it was 11 million?
Yes.
Wow. That's amazing. Yeah, that's incredible growth in the subs. Gosh. So it was in 2015 it was 11, 2016 it was 30, and now it's 60. Wow. Yeah, that is amazing.
Exactly.
That makes sense when people are so excited. Questions in my mind, and you may not have answers to these, and it's totally fine if you don't, because I'm kind of going off. I'm definitely going beyond your article now. I am curious. So the primary competitor would be the service that Tencent has, and then Alibaba has a service as well. So is it fair to say there's about 3 primary companies that are competing for this short form, like streaming audience? Yeah,
I would say that's very fair.
Do you have any idea of the size? Again, I don't remember the companies. I don't remember the company that Tencent and Alibaba are both back. The companies are backing. I don't remember the names of those, so let's refer to them as Tencent and Alibaba. Do you have any idea of the size of those companies in terms of subscribers?
Yes. So it's actually very interesting. Tencent recently passed iQIYI. So I guess you can't say that iQIYI is the biggest in terms of subscribers anymore, but Tencent Video, I think it was the end of maybe the beginning of April, came out with a number like 62 million. And so you can really see that, which, I mean, it makes sense because WeChat, their famous super app, has over 1 billion monthly active users. And so monetizing just 6% of that is, there you go, for Tencent Video. So like you said, there's definitely valid concerns over Tencent Video, but also I think they grew, I'm looking it up right now, they grew from 43 million to 62. So that seems
43 in
to me,
2016?
I believe so.
Okay.
I believe so. It could be a little bit later. If it was later, that would be kind of scary just because you see that growth. But right now, it's pretty neck and neck between iQIYI and Tencent Video.
And Alibaba, do you have an idea what their competitor, where they rank in?
I don't off the top of my head.
Okay. So it sounds like the real competition is between iQIYI and Tencent Video.
Yeah, that's my understanding at least.
And again, it comes back to a point you made is, you know what? I have a subscription to Netflix, Hulu, and I use YouTube. I don't subscribe to YouTube, but I use YouTube. So that's 3 different services, and I consider them all completely different services. I don't feel like there's a little bit. Oh, and I have Amazon Prime. So I have 4 streaming services. 3 of them I'm paying a subscription fee for. 1 I watch ads for, and I'm fine with that. And so that's part of the thing too. As long as iQIYI is able to differentiate itself from a value perspective from Tencent Video, then it really shouldn't be. It reduces the fear that can come in of, oh, here comes Tencent.
Exactly. I think that's a super important point when you're looking at this from a long-term perspective. And so it is helpful to kind of look at some qualitative aspects of the business to see if there is some differentiation, like you said. And so iQIYI, I believe they have 42 of the top 50 drama series for in terms of content. And they've won a decent amount of awards. So you're just kind of seeing that the content is resonating with.
That's really important.
people over in China. And so kind of like the softer side of the business, you can definitely track the financials and you'll see like the subs. If they start decelerating a lot versus Tencent Video, then you might get a little wary. But I guess in the meantime, you kind of look at these more qualitative aspects of the business.
No, that's a helpful point. Two helpful points. One, I hadn't even thought to ask if there's any kind of quantitative data to understand the value of content for iQIYI versus Tencent, which the idea of them having 42 of the top 50 drama series, that's a pretty powerhouse domination right there. Another thing you mentioned, which I thought was really great, is looking at the growth trajectory of iQIYI versus Tencent Video. Because if you see the growth of Tencent increasing significantly over that of iQIYI, you can wonder a little bit what's going on. But even then, it's not necessarily a bad thing, because like you said, if Tencent has a billion active users in WeChat and they flip the switch on promoting, Tencent Video to WeChat, then, I mean, they should be able to outgrow iQIYI pretty significantly. But that doesn't mean iQIYI is necessarily hurt or going away. It only hurts iQIYI if people dump iQIYI for Tencent Video, which I suspect, based upon consumer behavior in America, I highly doubt that would happen.
I think you hit the nail on the head. That's, I think, a huge portion of this investment thesis.
So tell me this. So a lot of positives about iQIYI. If you compare them to Netflix, which just sounds like there's a lot of good reasons to do that, they're undervalued by about 8x. But you think, well, but their subs cost about a quarter of that of Netflix. So let's say you that knocks it down to maybe about a 2x multiple. Netflix is about a 2x multiple over iQIYI, if that makes sense. Take 8 divided by 4. I hope my math is right here on this. So that reduces the gap between the premium to Netflix or the discount to iQIYI. But either way, it's still double. So point of that being, if we're saying that iQIYI is a similar service to Netflix for China, if we're saying that's the case, then either Netflix is way overvalued or iQIYI is undervalued. So basically, if you are a Netflix investor in America, it makes sense to say, hey, there's opportunity with iQIYI. And then as far as competition, it sounds like that's not really a super concern. So if iQIYI continues to execute on the path they've been going on, there's a pretty good investment thesis there. Obviously, it's been run up a lot fairly quickly, but the pullback probably does create an opportunity, like you said. Are there any concerns or risk factors we haven't discussed relative to iQIYI that you'd want to share with us before we sign off?
I think that's a good portion of the main things. Definitely just the path to profitability. Operating margin is negative 22%. So I know some people kind of get all up in arms if a company has negative operating margins and things like that. But I mean, that's also part of the reason why they IPO'd. They have $2 billion in dry powder to kind of combat that. And so I don't think they're burning free cash fast enough to really warrant any issues. And so I guess it really comes down to that competition and kind of how they navigate that.
Awesome. Well, hey, thanks so much for your time on the show, and it's good to have you with us.
Oh, it was my pleasure, Brian.
The information and opinions contained on this podcast are for educational purposes only. The information does not consider the economic status or risk profile of any specific person. The information and opinions expressed should not be construed as investment trading advice and does not constitute an offer or an invitation to make an offer to buy and sell securities.